Income taxes. Stag's company has prepared its 2019 statement of cash flows. In conjunction with the statement, it plans to disclose the interest and income taxes it paid during 2019. The following information is available from 2019 income statement and beginning and ending balance sheet. We have the interest expense and the income tax expense from the income statement, and on the balance sheet we have balances for interest payable, income taxes payable, bonds payable, premium on bonds payable, and deferred taxes. And so over here on the side, I'm just going to do a quick function to determine the change, and I'm going to do the absolute function so that it presents it to us in a positive number. I just think it makes it a little bit easier when we do the actual math, but we can indicate on the side whether it's an increase or decrease. So obviously there's been an increase in our interest payable, there's been a decrease in our income taxes payable, no change for the bonds payable, the premium on the bonds payable, there's been a decrease, and the deferred taxes has an increase. And the reason I think it's easier to do it this way is because then you can refer back to your little reference tool, if you have one, that indicates that we add decreases to interest payable and we subtract increases to interest payable. So I think it's easier to see it that way. And let's over here on the side go ahead and just do one of those little references. And so as far as interest goes, we would add a decrease in interest payable, which means that we would decrease or subtract an increase in interest payable. Then we would add the amortization of premium on bonds payable. We would add the interest capitalized, and we subtract out the amortization of the discount on bonds payable. As far as the taxes, we're going to add decreases in our income tax payable, which means we would subtract increases in income tax payable. We will add a decrease in the deferred tax liability, which means we would subtract out an increase in the deferred tax liability. We'll add increases in deferred tax assets, and we'll subtract out decreases in deferred tax assets. So now we have our little references as to what we'd be adding or subtracting out, and we can come over here and compute the amounts of interest paid and income tax paid by Stags for 2019. So for interest paid, we'll say equals, we'll start with that 12,000, and we see that as far as interest payable goes, we had an increase of 1,700, so we'll say minus the 1,700. Income taxes payable doesn't apply. The bonds payable itself doesn't apply. The premium on the bonds payable, we need to add, so say plus 900, and then the deferred taxes doesn't apply. So press enter, and so we have $11,200. Then for income taxes, we'll take our $35,000, and then we have this decrease of $2,000 on the income tax payable. So we'll add that $2,000, and then we have an increase of deferred tax payable. So we'll subtract the $1,100 for a total of $35,900. Let's make those bold. Under IFRS, interest paid, and then we have these options. May be reported as either a cash flow for financing activities or a cash flow for investing activities. May be reported as a cash flow for operating activities or a cash outflow for financing activities. May be reported as either a cash outflow for operating activities or a cash outflow for investing activities. May be reported as a cash outflow for operating activities. And so the answer here is that it may be reported as either a cash outflow for operating activities or a cash outflow for financing activities.